Hey guys, Joe Frank here, market analyst for YouTrading. In today's video, we're going to be taking a quick look across markets, talking about what's currently going on as we hit the middle of the week. And pretty much we're seeing a deterioration in risk appetite. We'll start with the S&P 500, which I talked about a trade idea yesterday where I think that if it continues to fail to get above its 200-day moving average and hold above the downtrend from 2022, more further downside potentially is in store, including a test of this recent December lows. And it looks like it's on course to do that. We're down about 2% today. There's been some concerns now in Europe with Credit Suisse, one of the biggest banks in Europe, Swiss bank. Their shares dropping, I think, like 30%. In fact, we can probably take a look. I don't know what their ticker is. Credit Suisse Group. Well, they've paid losses a bit, but down 16% still. And you can see, look at this downward spiral that this stock has been in for just ages, since the pandemic, really. But anyway, concerns about financial stability still dampening sentiment, and you're seeing a safe haven bid come in to lift the dollar, which, by the way, is up despite this core PPI data and retail sales data that we had out today, and Empire State Manufacturing Index data. All three releases coming in weaker than expected. So Dixie rallying definitely on a safe haven bid in the face of a further pulling back of Fed tightening bets, which, by the way, can be seen in the 2-year yield, which has hit fresh lows. Look at it, it's been all over the place. This is just insane volatility. Intraday, it went as high as 4.4, now close to 3.8%. Like, wow. And I mean, the 2-year yield is the one that's really sensitive to rate expectations, pretty much near-term Fed hiking expectations. So you can see that this pretty much says that markets are all over the place in their view of what the Fed is going to be doing with interest rates. But currently around 3.8% below the 200-day moving average for the first time in, I'm gonna have to go back a long way probably. For the first time since a year ago. No, 2 years ago, excuse me, when we first started pricing in any Fed rate hikes at all. So yes, that's not good. 10-year yield also lower, as you would expect as well, as the longer term economic outlook takes a hit. If we are going to have financial stability concerns in the US, which, by the way, a bunch of bank chiefs are warning about. Let's just quickly take a look who said what. Yeah, BlackRock's Larry Fink. Banking crisis could worsen, worrying out loud recently that cracks in the financial system that formed during more than a decade of easy money and low interest rates, basically more cracks could form. Ray Dalio, these are all very respected voices. Expects problems to start mounting in the fallout from contractions in debt and credit markets. Obviously, that's hit a lot of the balance sheets, a lot of these major banks and smaller banks as well. The recent failure of Silicon Valley Bank was just a canary in the coal mine, he says. So a lot of people still worrying a lot about financial stability. And if we do get some kind of financial crisis, that's going to weigh heavily on growth because the banks will stop lending, and that really is one of the key engines of growth, lending to businesses so they can expand their operations and all that kind of stuff. Interesting moves in oil as well. We've got the economic outlook darkening substantially in the wake of all of this turmoil that we've been seeing, and as a result, oil has slumped out of its range that it was in for quite some time. And where are we looking at now for WTI? Well, we're looking at a test perhaps of this sort of triple bottom area around 61, 62. Gold, oops, let me get gold up, there we go. Gold pushing higher, looks like it's probably going to test those recent highs in the 1960 area, despite the fact that the Dixie is rising on a safe haven bid. I mean, if we are talking about a super dovish Fed, it depends how bad this crisis gets, because really, actually, the dollar is the ultimate safe haven, or it seemed to be that way in the pandemic anyway. Then that could weigh on gold if the dollar really, really gets going. But if we're talking about the Fed doing massive easing, That could potentially be a headwind that prevents the dollar from doing really, really well. And if yields are slumping, this is a good environment for gold to push higher and to test, 2000 potentially. Bitcoin actually also doing pretty well despite the slump in risk assets and underperformance of stocks, because this is actually the first rumblings of a financial crisis that we've had since Bitcoin was created. And by the way, Bitcoin was created in response to the 2008 crisis, which resulted in the bank bailouts, which angered the essentially libertarians who thought that bailing out the banks was hugely corrupt, and they wanted to create an alternative financial system. And that's kind of what Bitcoin and its advocates want. They want Bitcoin to provide an alternative to the weaknesses of the current reserve central bank, like centered reserve banking system. So Bitcoin's been doing pretty well. What else should we have a look at? We pretty much looked at everything actually, haven't we? It's not DXUSD, just Dixie. So just what I'm looking at now is for whether these themes are going to continue to drive the price action, whether the stocks can continue falling. I think the risks are tilted in that direction. Same for oil. Gold tilted to the upside, you'd have to think. The dollar as well. Yields could continue to fall. If we start getting some more bank failures, I think it's going to get ugly potentially. And Bitcoin, by the way, did break above key resistance in the 25,200 area yesterday. It's back below that now, but technicians talking about the fact that the door's now open to the test of this this next level here around 28k, which seems reasonable. And you'd got to say the door's even open perhaps for a test of this resistance here, which is in the 32,500 to 33,000 area, if it can get above this 28k area. That's assuming these narratives about Bitcoin being like a safe haven asset amid a banking crisis, assuming those narratives continue to hold ground, because there have been negative developments with crypto recently as well. Like there's a lot of banks. Well, the collapse of the 3 banks last week in the US, they were all crypto-friendly banks that were trying to improve access to crypto markets from fiat markets. And now they're gone. And now other banks are tightening access from fiat to crypto. Like you got a bunch of banks in the UK, sadly for me, they're putting limits on how much you can send to exchanges and, all this kind of stuff. So, there are negatives going on in crypto. And obviously there's the traditional correlation between stocks and crypto as well, which could weigh on Bitcoin. But in terms of data for the rest of the week, data is less important at the moment, but, unemployment claims, Philly Fed manufacturing index tomorrow, preliminary University of Michigan consumer sentiment report out on Friday, which includes inflation expectations. ECB is going to be raising interest rates probably by 50 basis points on Thursday, although, in the wake of what's happening to Credit Suisse, it's a Swiss bank actually, so it's not in the Eurozone. But if this crisis starts gaining ground in the Eurozone as well, then it's like 50 basis point rate hike. Oof, that could really upset things. But yeah, that's not what I'm going to watch for the rest of the week, guys. Hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.